Hello, hello, hello. Good morning, everyone. Happy CPI Wednesday. How are we doing? Good morning, options 22. Real quick to answer your question, we'll try to get to it. I have a very busy morning, but did not want to cancel the live stream. Something came up late last night. NVIDIA closed on an up close. Bob and I, if you're waiting for the close, do require a down close for a double top, up close for a double bottom. So if you want the probabilities to be higher, wait for the down close. If you're being more aggressive, the up close did officially trigger it, but if you want the higher probabilities, you have to wait for the down close. That's a little thing for everybody who's been following along with the channel, a little advanced tidbit. So keep that in mind, and that's valid for any time frame. So if it's a 4-hour, you need a 4-hour down close for a double top, not a 4-hour up close. A 4-hour up close officially does it, but it's lower probability. Good morning, Patrick. Good morning, Caps Lock Sterling. Thank you for putting in the CPI information. Good morning, Tony. Good morning, Martinez. Good morning, Alan. A bunch of people showing up for CPI. Good morning, Jacob. Fitch, I still expect a mild recession, though we now anticipate this to occur in the first half of 2024. So, yeah, I'll get to the numbers. So, real quick, core coming in hot. Our core CPI month over month, and remember that's the preferred, one of the more preferred measures. I can't call it the preferred measure of the Fed because they look at the core more so than the headline. The headline coming in at 3.7 year over year versus 3.6. Core coming in month or year over year 4.3 for 4.3, down from 4.7, but a lot of that's due from the base effect and prior things falling off. But this is a little troubling. Core CPI picking up. Now, if this becomes, a trend more, if this starts getting entrenched a little more, if we start seeing next month's print being higher than expected or higher, up at this 0.3 range again, it's starting to get sticky in the core, which will be very interesting. So far, the market shrugging off the print this morning, a little immediate sell-off, then a snapback. CPI month over month was in line. So that's where that stands. What else do we have this morning? It's easier to see on here. We have watch the EIA numbers for crude. Crude is looking slightly toppy from my perspective. So keep an eye if you're trading crude. Now tomorrow we also have the PPI and retail sales, business inventory. So the week is not over yet. So far things are bouncing back. Apple. What did people think of the Apple? All right, you're changing the case and the charging point and a better camera. Has Apple completely lost its innovation? Come on. What? Come on. I want to hear people's thoughts on that, actually. NVIDIA, I already talked about that. We'll try to get to the chart on that. Sort of mixed in the mega caps this morning, sort of mixed all around. If we look at the groups, let me just refresh this. The financial and energy are leading things higher, basic materials, but everything very mixed to flat. So it's going to be interesting to go into the open. Let me refresh this one too. We'll just take a quick look at the fear and greed still in neutral mode as of yesterday's close. And the probabilities, nothing really shifted. Actually, see, you're not getting any shift. So we have a little stickier inflation print and nothing's really shifting on Fed. Nothing's really shifting, at least from the bond market yet. Nothing's shifting. So let's see what else. Oh, by the way, here, this is some interesting. If you don't follow Liz Ann Saunders, she posts good charts. She does post good charts. It's at Liz Ann Saunders. She works for Schwab. So she posted this. This is the CPI select categories month over month percent change. So you see gas, fuel, and airlines related also gas and fuel, leading the charge higher for CPI month over month. Used cars and trucks, dairy and related, and fruits and vegetables coming down, alcoholic beverages flat, and everything's still up. On the year over year basis, let me see if I have that one too. Year over year. So remember, if oil stays higher and starts moving into gas more and more, we could see inflation get stickier. Year over year. Now, airlines year over year have still dropped. Used cars and trucks down 6.6 and gas year over year 3.3. But if gas stays stickier and higher for longer, that's going to start getting erased on a year over year. Now, this is starting to drop. on the month-over-month rent of primary residence and owner equivalent rent are starting to drop, so that will somewhat offset it. But you look at this, year-over-year numbers still are very, we don't have it balanced. And if gasoline and if used cars and trucks even get any stickier again, and I don't know because we're definitely headed into a slowdown, but it is something to pay attention to. Where else? What else do we have? Earnings today, nothing. It's tomorrow, Adobe after the close. So we had the little immediate blip sell off and the snapback. So, okay, so far it was numbers are out of the way by the dip. Hold on one second. Little sip of green tea. This does qualify for a double. Even on the 4 hour, this is still the left-hand side of the double. So guess what? I'm watching this peak of is the double within a double. 45, 43, 50. 45, 43, 50, which is the high for Monday. So I'll be paying attention. Why does that qualify? Why does that qualify? Because on this hand side, look, you have the first candle. This is the move that started it, and the second candle going into it. So I would be utilizing, and the third target is up by the prior first target from the bigger double. That's why I'm paying attention to it. So we have a double within a double, but that's only triggered on at least a 4 hour close above 45, 43, 50. What I'm paying attention to, so that's what I'm paying attention to in the bullish case. Minorly going into the open, we're getting some selling pressure about 45.19, and then you have 45.24. It's really got to start getting above 45.24 before I start really watching for more that the bullish case could start running. From the bearish side, you've had support. Look at this is a support area. First support area that I'm watching is really about 4,500 to about 44.95. You see buying pressure on Wednesday from last week. It dipped through there, but then snapped back quickly. So my next level will be 44.85. But you had buying pressure on Friday. You had buying pressure on Friday again. You had buying pressure this morning from this quick dump in the CPI release and the snapback. So pullback 4,500 to 44.95. 40 if it breaks there, 45.85 gets to be key. You start breaking 45.85, you're in uh-oh mode. That breaks last Thursday's lows, you're into a clear path move. And then we're watching 44.73.25 on a closing basis. Why? That would invalidate the remaining bigger double pattern that only hit the first target. All right, so the next targets I would utilize would be 44.73 and then 44.48. And then their next area, major area, especially if you close below 44.73, is 44.23.75. To the upside, you break above Monday's high. The key levels I would be looking at is about 45.64 on the bigger time frame, 45.80, 45.92. Hey, Christoph. Turns out September is not bad. September's not over yet, Coco. How can you say September's not bad? We don't know where it's going to close yet, whether it be up or down. And remember, if you watch the podcast, every September isn't bad, but it does have a tendency to be the worst month by far of the year. You can't say the month's not closed yet. Hello, Christoph. I think Apple has pushed the phones as far as it could go. Vision Pro is the innovation play, but that's going to take a couple of years to bear out. Well, thank you, Alan, for that feedback. When are you ever taking a vacation? Someone's office. Haven't seen you take one day off. I think I took missed a day. And I'm not going to be taking a vacation for the next month at least, because it'll probably be closer to the end of the year at this point, because there's just too much going on that has to be dealt with on a personal and family level. Look, everybody, at Wall Street Bets representative is here. Oh. So remember, we analyze both sides of the market. That's why we do it, and we play well, at least I play the probabilities. It's not about being right or wrong. It's about putting probabilities in your favor. So that's why, if and I really and I somebody mentioned that there weren't the proper charts. Bob's looking into that on the podcast. So, but if just listen to it, just listen to it, because again, This is the time where fine, VIX is cheap. VIX is cheap. Worst case is you hedge a bit for September, and then you give up potential gains, or you take a slight little loss on your hedge, and you play the probabilities. And then going into the end of the year, the probabilities shift up, so you get patterns going in the end of the year. You play them, but every year, even the up move is not guaranteed into the end of a year. So keep that in mind. Nothing is guaranteed. You always have to play the probabilities. NASDAQ does not have a little mini double. The NASDAQ, the buying pressure is roughly between about 15,420 and then roughly down to about 15,390 to about 15,363. You lose 15,350, watch out below. That will not be good because all the buying pressure is absorbed. So going into the open is about 15,535 that I'm watching, and then 15,670 should it be able to get a rally on. The Dow caught in the range. I'm going to be watching. We had a wide range bar outside day yesterday. I'm watching yesterday's high and low. Before that, I'm watching about 35.50 for the potential breakout move. Russell is actually the strongest thing, but still, when we covered Russell in depth yesterday, on any rally play, I'd be watching for a rollover. It's aggressive to the long side, so it's aggressive trailing. But the key resistance is coming in about 1883. Looking at the VIX, there is no fear. Again, still 1481. That's the level I'm watching there. The DAX is now forming into quad bottom range. Quad bottom range. I don't think this is a double. I did not measure it out. No, it's not. So if this really breaks, the buying pressure comes in at 15.6. We break 15.6, 15.550. You kiss 15.550 goodbye. That's trouble for the DAX. Other than that, I'm watching for a bounce and a roll over there. The notes, which had the immediate sell-off, breaking below the most recent lows and snapping back into consolidation. So that invalidated the little potential double. So there's no great setup there. We're going to wait till after the PPI numbers anyways to see more with bonds. This is not a good setup. The yield returning to the 87.5 rule. Remember, closing above the 62.5 on the 5th, hitting the 87.5 today. So we do have still the double top in play. Now, we got to extend the targets out. There you go. But there's no strong short yet in yields. The 2 years just keeps climbing slightly, although down a little today. The 10-2s on the back adjusted basis, we're just going to keep it on this for the time being because of these key levels. We have a little mini double for bear steepening. Dollar index pulled back after CPI, but now bouncing up again. Bouncing up again. Does this qualify for a double? Yes, it does. There's your 75 hit. So, do we have a slight mini double top? You got to close below Monday's low? You do. Now, so far it's been roughly a sideways correction. We had one, a little pullback, but it's roughly on the bigger time frame, a sideways correction. Still, weeklies are at the top. But, that would take it back to the weekly rotation zone, should that trigger. Dailies are almost to the bottom again. Getting interesting there. And by the way, it is a slightly lower probability because it's against the rotation zone. So this is something, personally, I'd be looking back at pullback levels to utilize. Crude, coming up, hitting the next minor harmonic and looking a little toppy up here. You see right here, we start breaking below about 88.60. Going to be watching for a slight pullback at least. We are getting to overbought territory. Let's just see what else. Gold still has the little potential double in play, but nothing else to talk about there. 10 years holding here. We're going to have to move this to the forward, still climbing based off yesterday's close. Still climbing. This is going to get very interesting at some point with the JGBs and what they're going to do with the yen. 0.74 is the next major target. Yen rotating back up to, nothing's changed. Still 148.85 is the next key target. 146.50 being the support. And you see that nice support base right here. Euro, not much. On the rally, still watching for rollover plays. The pound finally connecting with the 200 again. Finally. And this is just buying pressure. So if this 200's lost on the if this area is lost about 124.20, watch out below in the pound. If it breaks above roughly and can close above about 125.10, we'll watch for a little more upwards pressure. No one says kiss it goodbye anymore. Well, why not? Good morning. Hey, Mike, the weekly, monthly on Tesla valid double top. We'll take a look at Tesla right now. Would you go over to VIX, please? I thought I looked at the VIX. There's still 1481 before you can get into super bearish mode or minor bearish mode. It's not even super. Tesla, we didn't look at that yesterday. Is this a valid double top? Well, we've got that 75% connection, so now we have to see. We have to measure it out. So, yes, it is. Yes. Good eyes, Kratos. Good eyes. 75. So, does that mean it has to stop here? No. The intermediate bearish play would be a break below Monday's low for a gap fill. For a gap fill potentially down to 248.50. The bigger play would be if it does close below Friday, August 18th low, which could take it back to the low area on April 27th. You know, low area at the end of April. 179.35, 164.84 would be the first two targets. So, yes, it is. So that would be super bearish mode on Tesla then. But that does not mean it has to stop just yet. I'm just wondering if it does creep up to the 87.5. Let's just... And then I got to jump to the next thing. Even if it jumps to the 87.5, it would still be valid. So do keep that in mind. All right, let's get NVIDIA. Then I'll get to the spiders and the Qs. So this was your technical up close. This close was below this low. So it does not have the down close higher probability. So if you're being aggressive, this has triggered. If you're being a little more conservative, it has not. It's triggered, but it has not triggered an entry. So that's the way that works. Again, to address options 22's question. Personally, with the cycles at the bottom, my personal thing is I'd err on the side of a little patience. Watch for any slight rally over the next couple days, and then look for another rollover play. So that's just personally because it's also into the weekly rotation zone. But that's a little nuance there. Now let's take a look at the spiders and the Qs. The Spideys, 445.98 roughly. We're trading at yesterday's close. I will be watching yesterday's lows, 445.39. We break below there. Next support 444.60, and then major support coming in at 443.40. The invalidation point for the double is not till 440.76. Anywhere before 443.34 and 440.76 is a possible support zone. What this really needs to get something going, this isn't. If you're looking at the shorter time frame, we don't have a little mini double yet. So if it does pull back farther, it might qualify. I'll be keeping an eye on that. We'll have to cover that tomorrow. On the upside, the key resistance is still about 448.50, bumping this level up just a hair. That's the key breakout zone. You start breaking above there, you have a gap left behind from the 5th. And then you have the next target I would utilize is back at 451. So sort of caught in this little consolidation right here. The Qs, 372.79 yesterday's close, 373.09. So first level support, 372.79 yesterday's close. And then we have roughly about 372 and then 370. Below that, your support zone coming in about 368.50 to about 369. So those are your key levels below. If we want to look for the upside, let's see if we can find anything. It's really got to get back above about 374 before it be anything but a bull snap reversal. And then we'd be looking about 375.32. And then roughly 376.50 area, and then the gap fill left behind to 376, 377. All right. What are your thoughts about prop firms? It really depends on the prop firm. I've worked with a couple prop firms before, but it really depends on the prop firm. There's good, there's bad, there's ugly. What else do we have? There was nothing at earnings we had to cover. Again, I got to jump before the open. Let's just see NTNX. I'll take a look at this real quick. Nutranet. Where? I have... Boy. I'll give you the... Well, here's your levels. Let's see what the levels are. Let's see what the levels are, bruh. So, hitting that 75. Next key area is 40.62. Let's see where the reverse harmonics takes us. And this is a major resistance area. Also looks like a very sloppy double top. So as long as, and it's lopsided, but that'd be the key level. Also because it's a double. So that is key. To the upside, you break above about 36.75. The next major target is 40.62. The next minor target, I'm showing exactly how I come up with this so people can do it. I mean, you can literally. So what I would use is about 38.14, then 39.79 to 40.62. That's exactly how I'd structure the levels to the upside. To the downside, you close below 34.10. You not only have the gap fill, you have a triggered lopsided double. There you go. So anything, that would be the key plays. RCKT search 30% on phase 2 trials of Dan and okay. Oh boy. Well, we'll have to look at that later. Thank you everyone for tuning in. Boy, tuning up. There goes my head. Again, let's just take a quick peek into the look at this volatility back and forth so far. So I'd really be watching this 40 immediate on the open 45.04, then that 45 to 44.95 areas are the bear the slight bear case to watch for reversals. You start breaking below 44.95, not good. 45.16 to the upside has been the selling pressure. You can see that European Open time frame and the CPI time frame. You break above that, you actually have a short-term little clear path move. I would still, unless it gets a very strong tick, watch for potential choppy. We've been in choppy back and forth trading more so for the past few days. With that, I will talk to everyone later. Have a wonderful trading day. Bye for now.